Okay, so this basis period example is the one where in the second tax year there's a period of account which is longer than 12 months long. So the example we're going to use is this one. Derek started trading on the 1st of May 2011. So as you can see there, I've identified that tax year started trading is 11/12. So remember, put it in the exam you'll have a table, put it straight in. That's 11/12. This one would be 12/13, and this one would be 13/14. Then remember I said to also say which tax year this period ends in. So the period to June 12 ends in 12/13, and the year to June 2013 ends in 13/14. Then let's look at the basis period. So we're doing 11/12, and remember the rules for the first tax year will be from start of trade 1st of May to the end of the next tax year. So that's the 5th of April. Second tax year, you ask yourself the question: is there an accounting period or period of account that ends in the second tax year? Well, second tax year is 12/13, and we've seen it up here. Yes, it is. Now, second thing you have to ask yourself if the answer is yes is how long is it? So if you count from May 2011 to June 2012, you'll find that it's 14 months long. When it's 14 months long, when it's more than 12 months, you have to tax the 12 months to that year end date or that period end date. So what I do first is put the period end date in first, June 12, and go back 12 months, and that's your basis period. By the third year, you should be using the normal rules. So you'll see that in the third tax year, we're going to tax the profits from the 1st of July to the 30th of June 13. Okay, let's look at the numbers. Okay, we're going to go from May to March, and we're going to get those profits from this first period up here. May to March is 11 months, so we're going to take 11/14 of the £100,000 profit, and that's 78,571. For the second period, you always want to tax 12 months, so we're going to tax 12 months profits, and we're still, if you look at the dates, in this period here. So we're going to tax 12/14 again of 100,000. When you get to the third year, normal year rules, for example, someone's been trading for a long time, and we're just going to take the profits from the year ended June 2013. Okay, let's look at the overlap. Last thing, it's 9 months. If there are 9 months from the end of June, so July to March. Now this time you can't see 9 months in my little workings here. It's not actually there. What we have to do is look at it carefully. When you've got this scenario, we can see we went from May to March, and in here we've gone from July 2011 to June 2012. So the overlap is essentially from there to there, July to March. And if you count July to March, it's 9 months long. So we're going to take 9/14 of the profits from that period, because this period is in that first period. 9/14 of 100,000 is 64,286. And that's it, done.